Good afternoon, ladies and gentlemen. Just for your interest, South Africa are already 2 wickets down after 12 overs against India. But let's, as Bernard said, this is going to be a really lively conversation. This is actually where the rubber hits the ground. This is how we're going to finance junior companies. And to my right here, I've got a really esteemed panel. I'm just going to very briefly introduce them. And if you want to have a look at their detailed CVs, please look outside on one of the pillars while you have lunch or a tea break a bit later. Starting from my right, I've got Robert Philpott from Quinniseely Resources. They're probably one of the primary or most prolific corporate finance houses in the mining space in South Africa. To his right, I've got Olebogeng Sencho, an award-winning young lady in the mining space who's particularly interested in mining incubator funds. To her right, I've got Dr. Mike Seeger, a bit of an older hand in the mining space, but deeply experienced in alternative methods of financing. And then to the far right, Sasha Keane from Australia and Noah's Rule, who will take a more global view on junior financing across the world. Just to kind of get the ball rolling, I'm going to give literally a very, very brief presentation to set the context. The first thing, global exploration spending is on the rise after having dropped off a cliff from 2011 to 2015. This is very encouraging. Most of the expenditure is going on gold, Bernard, as you'll be pleased to see. However, and it's going to be one of the questions I'm going to address to the panel, is why isn't South Africa attracting an increase in expenditure? Park that thought for now. The second thing, we heard about this from Minister Mantashe on yesterday morning. Investors are deterred by perceived risk, but South Africa and Zimbabwe are gradually catching up towards Botswana, which is the highest ranked African country. So the movement is positive. But why aren't people still investing in South African juniors? We all know in this country about the social license to operate and the complexities in doing so. And I think a well-known fund manager in London remarked, probably the most difficult job in the world was running a junior company in South Africa. And I think this slide is probably a testament to doing exactly that. Value creation and risk. We heard at our first presentation this morning that there is the possibility of raising debt for exploration. Now, that's wonderful. I haven't heard of that one before, and I'm sure my learned panelists are actually going to comment on it. But the particular area on the value creation and risk curve which I would like to focus on in this presentation is exploration and, in particular, pre-development, which is normally what I would call the orphan phase of funding. Once you've got a bankable feasibility study, it becomes relatively easy because you can actually get access to bank finance and other things. And then the final slide I want to leave with you before I dive straight into the discussion are some of our SWOTs. I've made this Southern Africa because we don't live in isolation. Now, we have national borders with Botswana, Namibia, Zimbabwe, and Lesotho and Swaziland, of course. But we do have considerable strengths in the region. We do have a number of significant opportunities. So part of this discussion we're going to have over the next kind of half an hour or so is how can we leverage our strengths and opportunities, and how can we manage our weaknesses and threats? So, right, diving straight into this. I'm firstly going to start with Sasha over on my far right. And I'm going to ask Sasha a global view so we can actually set the context for South Africa. How has the situation changed in terms of junior company funding worldwide? Sasha.
Thanks, James. Well, I think there's never been more debt available for junior mining companies in the world. Most of that debt is now administered by private equity funds. Back when I started in the mid-90s, it was the resource banks that dominated that sector, the names that are no longer participants, Rothschilds, Barclays, Credit Suisse. A lot of those same executives now work in private equity firms, and they, through their experience and knowledge of where the risks are, choose to position themselves in the debt piece. The cost of funds from debt has increased. Interest rates have been falling, but when private equity is lending money, it comes with kickers It comes with warrants, it comes with fees, look-backs, royalties and so on. So the debt is available, but the equity remains the missing piece, and that is, I think, the real challenge for the junior mining sector. I'm talking about juniors that have projects that are ready for development. I think we can talk about exploration later. But finding that equity piece is the challenging part of the puzzle. Now, when the debt comes with so many hooks and other pieces, the returns to equity are difficult. And, I think if you say, where is the money? A lot of the people who have invested in junior mining companies will say, where did the money go? There have been a lot of difficult stories. It's a high-risk game. I was looking at some stories. There was a story in the Australian market today of a junior company that's recently got its finance, and it's announced guidance off by over 20%, share price down 60%. Its market cap is now at its debt level. This is the kind of challenging environment for investors, and I think what was the statistic we had yesterday in the voting where people, in the audience, would you put your money into junior mining companies? And 60% said no. And these are people that know the industry. So I think it's extremely difficult. And equity, until there's a buoyancy and until the generalist investor starts taking interest in this sector again, I think it's going to be extremely difficult for the equity piece to be found for junior mining companies.
Thank you very much indeed for that, Sasha. I think that leads quite nicely on to the next question, seeing that obviously an exploration company doesn't take debt. I think we must kind of park that, and Sasha mentioned that equity is harder and harder to fund. If I could hand over to Mike and ask him about what alternative funding options are available to juniors.
James, can I ask you to put that
Please,
slide up?
can you put the slide up? Thank you.
And then I'll talk around that. So the money is in the business case. That's my answer. If you've got a good business case, there's money available. So in the slide, as a mining engineer, I need to tell you, you start with the ore body, the reserve, and the market, the customer. And if that business case stacks up, if you can mine, if you can process, if there's a product that you can sell, and if there's a logistics path, there's money available. And I've, in line with the question, where's the money? I've put a few pots on that slide, and let me talk you through those briefly. So, number one, for junior miners, I think the biggest money lies in strategic partnerships. So, partnerships with mid-tier companies that have got cash, that want to partner with a junior mining company. Therein lies, in that pot, there's a lot of money. And I've seen transactions and proposals where decent offers have been made financially, and the junior has to now reflect, do I want to take this money up and do the transaction? And with this also comes shareholder expectations. So if those are aligned, there's money available. The second pot is vendor finance. There's a lot of contractors around that have got cash, that are looking for work, that are willing to take up a risk position in mining projects, such as funding the box cut, funding shafts in lieu of getting paid operating costs at a later stage. There's equipment finance available if the business case stacks up. And there's a series of bartering finance around, which is basically selling a mineral commodity at a discount for cash now, so the junior miner does not have to incur huge upfront capital. And the DFI's development finance, in that pot there's also money available for junior mining projects. But the business case has to stack up. And in South Africa, there's a few challenges with the business case. It's in the tenement security, skills. We've got a lot of good skills here, but they are slowly becoming older, and bringing in the old guys to enhance the skills of this mining business case. That's one of the formulas that I recommend. And the logistics path. You can have the best commodity and the best customer, but if you can't transport the product to the customer cost effective, it doesn't stack up. So these are the types of capital that are available, but it's all about the business case.
Thank you very much indeed, Mike. I think this is a very good primer on once you actually have a reserve. If I could ask Leboheng, you haven't got a reserve, you've got an idea, you've got a tenement, you've got an exploration project. What are the kind of new methods used in which one can actually raise funds for that?
Look, the new methods are all about democratizing capital and finding ways to move where the traditional corporate financiers will essentially not touch the project, because the level of the project that you're talking about is the orphan phase, where literally all you have is that idea that I suspect mineralization over there, and that is exactly where I want to dig. For SMF, we've explored several different options in terms of funding people from that exploration level. We've explored blockchain applications, which include initial coin offerings, which actually enable investors to invest at that level of exploration. We've looked into crowdfunding, which has been very, very successful for us specifically because, remember, unfortunately, South Africa has an inappropriate risk appetite for the kind of mineralization it has in this country. Our mineralization is so beautiful. You know, if Musa Mabuza was here today, he'd say our geology rocks. But we do not have the risk appetite to marry with the type of mineralization that we have. So the risk has to be on us. And I don't think we can start this conversation at the level where the feasibility study is already ready. We have to go all the way back to exploration. And what we've actually started looking into as well is government intervention in that particular phase of, you know, in the orphan phase. How is it that the Council for Geosciences can come forward with historical information? How can we corroborate that information to create the first case for drilling? How do we corroborate the initial drilling campaign to essentially make a case for the second drilling campaign? How do we move along that line using the government institutions that we have within the purview of our democracy? So I think those are some of the, if I'm not going too much out of the box, those are the ones that have worked for us so far.
I think that's very interesting. I think that's the first time we've heard the term democratizing capital. And I think it's the first time we've actually heard the term crowdfunding, which, as you quite rightly say, is widely used in Canada for initial exploration funding. Robert, if I could ask you the question, the difficult question, of which juniors in South Africa, be it public or private companies, have been able to raise funds and how?
Thanks, James. I think what we've seen at Kinisele is the juniors that have been able to raise fundings are the ones that have generally been the most honest about what they've got. I think, unfortunately, late 2007, 2008 saw a plethora of companies that, I think it's a well-coined term, overpromised and under-delivered. I think that's one of the key things we see, and also making sure that their licenses, their tenements, all their boxes are ticked. We often see guys come through and they're missing something, looking to raise capital. It makes it a very difficult sort of thing to take on when you know there's a key thing missing. And I think one of the other things Andries highlighted this yesterday morning was the need to make sure that your value chain is completely sort of locked down, because you might have the world's greatest manganese deposit in the Northern Cape, but if you've got to put it on a truck and try to get it out of Saldanha, you're not going to get it anywhere. So for us, I think those are the key things that the juniors that we've seen that have been successful have been the ones that have sort of delivered on what they've said.
Thank you very much indeed, Robert. I think that's a really important point, and I think Sasha also made the comment earlier about over-promising and under-delivering. If I could then move on to Olabakeng for the next kind of question, is what would your 3 recommendations to government would be? And I'm using government or South Africa in its broadest possible sense. Call it the retail sector, private investment funds, the government itself, in order to stimulate the junior and in particular the exploration industry.
I think going forward, we need to relook at our policy framework and adjust it accordingly for the type of economy that we want to have, specifically in the mineral sector. We have a Section 12J company regime that is meant to mirror the Canadian model. it doesn't mirror the Canadian model. It does almost quite the opposite, because it doesn't allow people to, well, it allows people to risk their money, but people don't risk their money. They put their money in those funds for junior companies that have already reached feasibility stage. They have no appetite for that risk, which I think is really unfortunate. And I think perhaps in going forward, when it comes to an end this year, but I think when another round of this particular type of entity is proposed, what they could do is go further to expand that an additional incentive will be offered if you invest in the exploration space. I think that's very important. Number two, going back to the flow-through share system, I think we need a proper stock exchange that is supportive to exploration. Our stock exchange is adverse to explorers. As an explorer, if you want to raise money to explore, you have to go to Canada. That cannot be the case. We have to be able to raise that kind of capital here, and we have to have a stock exchange that is pliable and agile in that particular space. I think what's also a very important consideration, and I think Sean made he alluded to it, was that these big economies were built on mineral banks. We've never had a mineral bank, a mining bank rather, in South Africa. I think that is a catalytic point. It is the point where essentially if government invests properly in a mining bank, we will be able to free up as much capital as is necessary to fully develop our resources. We've got $2.5 trillion worth of minerals beneath our feet, and yet we've barely touched the surface. What most people will say is that, no, we're about 100 years into South Africa's mining industry is coming to its tail end. What we are failing to recognize is that it's at this point where technology is moving forward, and it's moving forward at the pace that it's moving, that it's likely that the biggest discoveries are yet to be made, just because of the technology that we're developing right now. Mining is going to get safer, it's going to get faster, it's going to get more economical, it's going to become a much, much better investment. So we have to have a robust policy framework that encompasses all of that and makes sure that when an investor comes in, these companies have been incubated sufficiently so that they are at that level where they are feasible now, and the metrics make sense and the business case makes sense. And we will very, very easily be able to raise additional capital for these junior miners because we have incubated them and we have created an environment for them that essentially allows them to thrive and allows us to export them quite efficiently. I think it's also important that our regulator, and that is the DMR, and I believe that they're here as well, I think it's important for them to start investing in the capacity to make these kinds of policy changes a reality. There's a lot of case studies out there that we can look at, but it's even more important to develop the kind of talent that can interpret what's working elsewhere and apply it to the South African context. What we've had happen in the past is that people have simply imported international ideas without contextualizing them to the South African mining economy. So I think I've gone a little bit beyond 3, but just in a broader nutshell, I think that's
Thank you,
where we
Alebika.
need to go.
I just want to take one of those points, and if I could ask Sasha this question. Australia also has a very long history of mining from the gold rush days and coming forward from that. But the Australian Stock Exchange and the Australian mining industry, from our perspective, is flourishing. Sasha, what do you think we can learn from Australia's experience?
I'm not sure if you ask the average Australian junior, they say it's any better over there. The Canadians complain, you go to AIM, people complain, you go to Australia, they say it's difficult as well. I think perhaps the Canadians look to Bitcoin and marijuana for taking their risk capital. I think there's an element of that, but I think they have to look internally and say, why do people not invest in junior mining companies? Because many people have and they've lost their money. It's a high-risk industry. What we're seeing in the Australian market, Australian dollar gold is as high as it's ever been. A few weeks ago, you could forward sell gold at a price that's never actually been seen before. So the margins are very good, and the money that's going into companies and is coming from high net worth mining executives who have made their money in other companies and are now backing projects into IPO or putting in their own funds, and also mid-tiers are backing junior mining companies themselves. They're putting in equity pieces. I think, a good example is Resolute, for example, one of the Australian mid-tiers, two mines, 2.5 mines, but they've got, I think, 6 investments in junior mining companies in between 10 to 25% of the equity. So they're placing their bets and supporting juniors, teams, project opportunities that they think could turn into something. So the cash balances of the mid-tiers is what's inflating and sustaining the junior market. It's even going across, beyond the Australian market. St Barbara recently took out Atlantic Gold, which is something we can talk about as well. But they're looking for opportunities with their cash.
Sasha, thank you very much. Mike, I'm going to ask you a question. Is that you had a very good discussion there in terms of funding post a reserve. Now, perhaps you could kindly suggest to us some of the alternative funding techniques pre a reserve. We've heard about crowdfunding. We've heard about democratization of raising money. What, in your view, would work pre a reserve?
So I think I would be a big believer in strategic partnerships. So if you're at an inferred or indicated resource base, seek the strategic partner that is willing to partner with you and find money in the strategic partner company in the mid-tier. That's my recommendation for South African companies. I want to bring another topic into my answer, and that is actually the answer might lie just in millennials in mining. And why is that? Because millennials are the future fund managers. They do not find mining at this stage sexy or attractive. They've got other focus areas, and we've got to bring young people and entice them to invest in the mining sector, to take a punt, like in biotech. Like in Canada, it's cannabis. There's multiple investment opportunities that young people need to be enticed to invest on a risk basis. So the millennials, attracting millennials back into mining is one of the longer term views to bring back capital into the mining sector, in my view.
Mike, that's actually a very, very good question.
James, maybe I can
yes, please do, Robert. Yes.
Add in there is that I think the point was made when Bernard stood up and said, what is graphite actually used for? I think someone's got to show millennials that this is what goes into their phone, this is their consumer products, your laptop. Mining might be ugly, but the brand of mining has to fit into being done properly, because it's what's going to be in every sort of EV, all of that. You need mining for that.
Maybe before I hand over to the audience for questions, could I ask each of the panelists, starting with Robert, turning the question a little bit on its head, about what can juniors do to actually improve their value proposition to funders? So, Robert, can I ask you that question? I think you've teed it up quite nicely by making the value proposition more attractive and more sexy, for want of a better word, to millennials.
Look, I mean, Bernard said his wife would like a diamond, he'd like some daka. So, I mean, that is a far sexier way to sell it. But I think the key for junior miners, especially what we see, is don't arrive at a funder's doorstep when you need the funding. It's a communication strategy. It's build your story. Let people understand the value chain from well before you need to go and raise the money. We often get put in the position as, I need 10 million rand or $10 million in the next 2 weeks, otherwise I'm going to be going out of business. If you know the story, a year ago you engaged with the investment market, you can sell a story. It's a much easier story to sell.
Olebekeng, what are your 3 kind of hints to juniors and aspirant juniors?
To be honest with you, I think to a large degree, our juniors need to invest in their capacity to present a good story. Because a lot of, like you're saying, mining is, I don't think it's ugly, I think it's beautiful. I live it, I breathe it. But to a large extent, people don't understand what's going on. And if you invest in your capacity to put forward a story that could catalyze broad-based economic growth and development, I think an investor would be more than happy to hold your hand, even though they don't quite fully understand what's going on. If you are able to convey that message fully, going fully into the linkage opportunities, the backward linkages, the forward linkages, and establishing yourself as a company that is going to you're not simply taking ore out of the ground or mineral out of the ground and going to sell it. You are creating something. You're creating a legacy. And I think a lot of juniors take it for granted that the good story is key. The kind story is key. The development story is key. Yes, sure, profits are important, but so is where you are going to be. What are those people's lives going to look like when the life of mine is over? So I think definitely, I don't have three, I have one. It's learn how to tell a good story.
Thank you, Lebakeng. Mike, your three or your one?
All right, look at the pots of capital and match your business case to one of those pots of capital. So make sure that the business case from ore body to market stacks up and you have a strong team. And no use fighting for a good story and one of the elements of the business case does not work. So it has got to stack up, it's got to motivate the investor to invest, and it's got to look first at the money and then match your business case to the money.
Excellent. Sasha, what would your advice be?
I would say be realistic and start, I don't want to say tell the truth, but there's a lot of fantasy. There's a lot of fantasy involved in the presentations that we see, and that famous junior mining share price graph that I think was attributed to Pierre Lasson originally, where there's the discovery, and then you go into this long malaise as you go into studies, and people know that chart. People think, well, okay, you're here. I'm not going to touch you until you may be down there. Why would I put my money in here when I know you're going to ask for more down here? And they'll go up and say, well, this period's 2 years, and invariably it's 3, and it takes a lot longer. So I think realistic projections, realistic expectations. Don't expect your investors to be fools and believe stories that are not realistic. I think that there've been too many optimistic stories put to the market. Expectations are not met. People have lost money and they're not going to come back unless it starts to become more realistic.
I'd just like to add my three, Bernard, before I open up the floor to questions. The first thing, and it has been covered by many of my colleagues over the past couple of days, is you have to put your own money in. Nobody will believe you unless you put your own money in. Secondly, if you're raising money on the Australian, Canadian, or British stock exchanges, as we know, those are the 3 stock exchanges available, you have to try and find local money, at least a little bit. There's at least, if you're operating a project in South Africa, there's a little bit of South African money. If you're operating it in Botswana, there's a little bit of Botswana money. I think that's very, very important. And the third one, and I borrow a comment from my chairman who spoke here a couple of years ago, you need the support of the 3 Fs, the friends, the families, and the fools, to kind of get you through. Because those are people, in addition to your own money, who are going to help you through the exploration and orphan phase. Right, we've got a few questions, and we've got about 10 or so minutes to actually get through with the questions. Lebakeng, maybe you can actually briefly answer the first one about what can industry outside of government do to improve and to ensure prospecting increases in South Africa.
I think it was Mike who said it, that strategic partnerships are key.
Correct.
We take it for granted that partnerships are actually capital. If you can partner with the right mid-tier or the right major, there's a great deal of progress that we can make in prospecting, because a lot of these companies actually have historical data of areas that have been explored, and they have a great deal of historical knowledge and institutional memory about a lot of these ore bodies. I mean, I was listening to Bernard saying that, he's pretty much worked on almost every ore body in South Africa. So that kind of institutional knowledge is invaluable. So those strategic partnerships, I think, are pivotal in us trying to find ways to work together within the industry as juniors.
Thank you very much, Lebakeng. Sasha, the second question there was a very interesting question. And if you take your Australia hat off for a moment, if you had a project in southern Africa, and I think we can sadly exclude the JSE at this point, which of the three major exchanges would you go to raise money?
I think the question is, what are you trying to tell your investors and what are you offering them? I think back in the day you could get away with a very early stage exploration story. You're asking for initial funding and there will be various stages of funding to come before you even get to a prospect that you can turn into a resource. I think now with equity funding so difficult to come by, the story has to be very good before you even bring it to market. You have to show you've got cornerstone investors there that have already backed it. You've got to show that management has their own skin in the game. Has to be a very good, case for why this is going to turn into something that will not just forever be on life support by shareholders. So I think it's difficult. Which exchange? I'm told the ASX is where the action is. Canaccord are telling me Canadians are lining up to list in the Australian market. Maybe that's just because Canada's so bad, but there is money available for good projects, good teams, and near-term stories. I think that's what people want to see. They want to be able to see where it's going, not just a bridge to nowhere.
Robert, could I ask you from Quinnisili's perspective, having a look at many different mining projects across South Africa, Southern Africa, which exchange?
Unfortunately, the JSE at the moment is looking for a success story. We need something to excite investors again, and we just haven't seen it. I think late 2000s, 2010, we saw a lot of Canadian juniors sort of have the end of their life on the JSE here. So I think we need to get some success stories to get the JSE turning. The success stories breed more success. We'll get more institutional investors to up their mining teams. They don't have the capacity to evaluate sort of opportunities at the moment. It's not very easy. So between ASX, TSX, and AIM, we hear the same thing. There is money for the right project on those exchanges.
So I'll just ask Mike one question. Mike, European exchanges. Often people talk about Frankfurt, for example.
Yeah. So my experience with listing hasn't been. I'm not a big fan of listing. Having personally been involved in one, and it's all about the commodity. And if the commodity is one where there's no good public sentiment, forget about listing. So in Frankfurt, look at EV metals. That's a market. If there's a need in the German economy for that commodity, there will be speculative investors. But it's all about the commodity. And in my opinion, there's a trend actually to delist and take the financing off the public domain. That's where I believe you'll probably have equal or maybe even more successes.
Bernard.
I am so sorry that there's a network problem. The second phone I tried is working, so I'll read the question. Sorry about that, guys. The question that hasn't been answered so far is how many exploration companies or prospective explorers is Simba Mgodi Fund assisting?
Well, I think I'll obviously have to ask Alebakeng that question. Unless you want to have a go at it, Robert. No? Okay, yeah.
We've currently got 9 on our books. 9 on our books.
Could you elaborate possibly a little bit?
Okay, so I'm assuming you're asking how many projects have we taken literally from prospecting, right, and are we ushering to productivity? That's 9 of them. There are 9 of them across the commodity spectrum, most of which are actually coal.
Could I then just develop that question momentarily?
Yes.
Is where do you get the money from for you to invest in these 9 companies?
Just came back from Canada, so a little bit of it comes from Canada. But we do very well with crowdfunding. We do very well with our blockchain applications because people understand them. Developed markets are not adverse to new technology, and I think that that's a marriage that we've neglected to a large extent. mining may be a legacy industry, but technology is brand new and people understand blockchain in the developed markets. And if you give them an opportunity to invest with something they understand, a financial instrument they understand, they're more than happy to part with that cash because they understand how that particular instrument works. And when you're using it in a market like South Africa, it gives you a lot more space because it's liquidity. And with liquidity, you can do a whole lot more than you would be able to do if you were pandering to a traditionalist who is a bank who wants to see facts and figures of drilling results and everything. So in terms of how we were able to actually accumulate our capital pool, definitely technology has been right up there as a useful implement.
Thank you, Lebekeng. Bernard?
I'm still in awe of blockchain and coins and dacha and I mean, geez, I'm having my zones moved here. But back to the questions. A question I find interesting, and I'm not sure I understand it, is are there pre-drilling exploration techniques which are particularly respected by investors in South Africa? So I think somebody is asking if you are pre-exploration, what are the techniques that will be respected by potential investors?
I'll give the panel an opportunity, and I can chip in with that one, running a junior. Anyone like to chip in there?
I have no idea.
No idea? Anyone? Robert?
I think it boils down to the team. I mean, if you have a trusted geologist with years and years of experience, he's able to identify anomalies out of mapping, aerial mapping, that kind of thing. You're going to back a person in that kind of environment rather than necessarily back the data that comes up out of it. I mean, I think that would be key to us if you're going to try and fund somebody pre a drilling campaign.
Lebekeng, you wanted to say something?
Yes, I do. Technology is wonderful, and new technologies are springing up every day that are making drilling more and more. You really don't need to drill anymore if you understand the technology that is actually being used in drilling. In Cape Town, we came across somebody who has actually developed some satellite that can beam into the ground and see exactly the mineralization. We have yet to see someone who has utilized it, but I think that the point I'm trying to make is that technology is moving at such a rapid pace that we need to keep abreast of these developments, because a lot of these developments are going to be pivotal in how we drill going forward, whether we drill or not, because these types of technologies are recognizing virgin rock temperatures and they are eliminating the need for large-scale drilling campaigns. So I think it's very, very important that we look into the technology that's being developed in that space.
If I could just maybe kind of add to your 2 points then, build on them. I certainly support Robert's point of view that it's all well and good discovering anomalies and geological models, but if you can find a mine finder, something has come to a mine, that's something that I would critically look at. And Lebekeng, your point is that there's a saying in the exploration world that every time there is a paradigm shift in technology, the exploration clock starts ticking again. If you listen to Professor Mike de Wit's talk yesterday, he started looking at, and he didn't give away too much, and probably quite rightly so, in terms of what are the lead indicators in finding a large diamond kimberlite, which up until now, you have to go and take 100,000 tons. But aren't there kind of technological ways? And then from a mining perspective, and many of my colleagues have looked at it, is that what is the future around waste sorting in underground mining operations, and what kind of paradigm shift can that give you from an operating cost model as well? So technology, I agree. Management, definitely.
I want to add another one.
So please, yes, Mike.
The artisanal miner.
Yeah.
And that's
Follow
a very good
him.
indicator. Follow him.
Yeah. Yep.
Rob, how do you expect juniors to have all paperwork boxes ticked when they need capital to achieve this? What assistance can we offer juniors to tick the boxes? You must have said something controversial whilst I stepped out.
As I say, Bernard, I think the costs of making sure you're prospecting right, your EMP, your social and labour plans, your sort of interested and affected parties are not giant costs. Those are the costs of doing business in South Africa as a junior. You're going to need your friends, your family, the 3 Fs to help you get through that stage. Those are the important boxes to tick. We can't fund something that is awaiting a grant, and that's where the DMR, the DME these days has need to play a role, is that you can't wait 12 months to get a prospecting right executed. or you can't wait a year and a half to move a prospecting right between potential parties looking to do a transaction. That kind of stymies a lot of the things. That would be, I mean, if the paperwork's in place, it's there. Let's just accelerate it.
Bernard?
Perhaps you can get closing comments and we can go to lunch.
Okay, very good. So if you could leave a kind of a parting comment and a word of wisdom to our esteemed audience here, starting with you, Sasha.
I think the funding solutions have to get more creative, and I think Walkabout just before us shows how difficult it is, even when you've got a great ore body, to attract the right kind of funding, and it's coming at a cost. High teens we see for some of these bond financings in lithium or some of the battery metals. Why? Because they're not exchange-traded commodities. They rely on offtakes, and those offtakers need to see that you can produce the product on spec in the volumes you say, and at a cost that you can make money. So it's risky and it's difficult. There's no silver bullet or gold bullet or platinum bullet for this
diamond
for this industry, palladium. But it's just difficult out there. And I think until the generalist investor starts taking an interest in commodities again, and that weight of money comes back in, it's going to be tough. That weight of money will come back in when returns start to materialise in the sector.
Thank you, Sasha. Mike?
So follow the money, look at the pots of money that are available, their criteria, and tailor your business case to the sources of money that are currently available, and then you'll be successful.
Short and sweet. Indaba King.
Back to what Sasha said, and being realistic. I think it was John Teeling who said in his that wonderful podcast that you sent me once was, I want your money, I'm going to take it, and I'm likely not going to bring it back. In junior mining, it is likely that you will lose a lot of money before you make any, and you need to be realistic and you need to be forthright and forthcoming. And the reason why I said you need to be able to tell a good story is that in those exact words that John said, that I will take your money and I am not likely to bring it back, you need to still frame it as an enterprise that is worthy of exploration, an enterprise that is worthy of investment, an enterprise that is well-crafted, a business case that is solid, and be able to convey that message in such a way that you do not diminish the realism, which is that this is going to be tough, it is going to take a while. Mining is not overnight success. It takes years. It can take a decade or more. So people just need to know to be realistic, one, with their time frames, two, with their stories, and three, I think they just really, really need that entrepreneurial spirit, absolutely.
Robert?
I think, James, for the right project, there's always going to be money available. And I think it's key in creating the messaging about that project. As I mentioned, you've got to make sure you sell the whole value chain. I think somebody mentioned to me the best thing he would love to see is a 6 million ounce resource, open castable, 6-7 grams a ton, but lives somewhere in the middle of Geneva. Those kind of projects aren't available. So you've got to show people how you move your goods out. Alphaman with the questions on logistics, it's a key to unlocking the whole value chain on a project.
Thank you, Robert. I just wanted to share a brief anecdote from one of my old chief operating officers of De Beers. He said the best way to explore, or the 3 rules to explore, it must be either very hot or very cold, there must be disease, or there must be war. And if you've got all 3 of those things, you're likely to find a world-class deposit. So thank you very much, panel. Thank you.
Thank you, James. Thank you, panel. Thank you very much.